Hello and welcome to the Business Standard Morning Show. I'm Ishan Gera and here are the stories for the day.
इस बार मनाली चलते हैं।
नहीं गोवा।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI से ट्रैक्टर लोन लिया, भाजी ये 100% सही किया।
SBI is the banker to every Indian.
Life Insurance Corporation's much-awaited IPO is finally opening on May 4th. But much like the initial euphoria around it, its size looks diminished too. Its current valuation is now 6 lakh crore rupees, less than half of expected value of around 13 lakh crore rupees. 3 years ago, the government had faced backlash for underpricing the IRCTC IPO. So is the government undervaluing another state-run behemoth, or has it taken this call after due diligence? Watch our next report to know more.
The initial public offering of India's largest life insurer LIC is finally here, albeit at a reduced size. The IPO is a pure offer for sale where the government is selling a 3.5% stake, down from its earlier plan to sell 5%. It plans to raise 21,000 crore rupees at the upper end of the price range of 902 to 949 rupees per share. That will still overshadow Paytm's 18,300 crore issue. The IPO price values LIC at around 6 trillion rupees or 1.12 times its embedded value of 5.4 trillion rupees at the end of December. The embedded value is a measure of future cash flows in life insurance companies and a key financial metric for insurers. When LIC filed the draft red herring prospectus, experts had pegged its valuation at 2 to 3 times its embedded value based on the valuation of its domestic private sector peers. However, market volatility due to the Russia-Ukraine war may have changed the dynamics. Listed private life insurance companies like HDFC Life, SBI Life and ICICI Prudential Life trade between 2.1 to 3.1 times their embedded value. The average market cap to EV ratio of the three is 2.6 times. If we apply the average multiple, LIC's value would be 14 trillion rupees. The IPO valuation is almost 60% below this level. However, it is in line with the multiples commanded by global peers, which are anywhere from 0.21 to 1.89. Analysts highlighted that LIC had a lower value of new business margin of 9.9% in FY21 compared with private players, who have VNB margins of 22 to 27% due to higher share of participation in group products. Disinvestment Secretary Tuhin Kanta Pandey justified the valuation and timing of the IPO at Wednesday's press conference.
The current IPO is the first step of long-term value creation for LIC shareholders. Government is committed to provide good investment and wealth enhancing opportunity to millions of Indians. This is right-sized considering the capital market environment and will not crowd out capital and monetary supply given the current environmental constraints. This is an opportunity for the Indian consumer to participate in the wealth creation of one of India's most valuable corporation. The valuation reflects this opportunity and the optimal size should provide for a strong demand and aftermarket performance. Valuation flows from the optimizing positioning, devising the best marketing strategy, accessing the investors in the right way and with the right sequencing, structuring the deal appropriately, and selecting the optimal market window. The current dilution is very small in the overall journey of this great corporation. The decision to list now has taken into account the combination of multiple factors, including market demand, which includes solid anchor book, stabilizing market condition, reducing volatility, domestic flows, and corporations' financial performance.
While the government said it has decided to go ahead with the IPO in May due to strong market demand and a solid anchor investor base, There also might be another reason. It has time till May 12 to launch the IPO without filing fresh papers with the SEBI. If this window is missed, LIC would have to update the offer documents with the latest results and embedded value. The government was previously criticized for underpricing the October 2019 IPO of the Indian Railway Catering and Tourism Corporation, popularly known as IRCTC. At the top end of the price range, IRCTC fetched a market value of 5,120 crore rupees. The government divested around 12.5% of its stake in IRCTC during the IPO and sold another 20% in December 2020. Today, IRCTC is valued at almost 60,000 crore rupees, an increase of 1,070% since the IPO. Does the government risk a repetition of the IRCTC episode?
If you see Chinese insurance companies, they trade at about 0.6 times, and global insurance companies are at about 1.7 times. Now, I feel it's a right strategy because this is a 3.5% dilution. So in my view, it's a price discovery process. And, Julius Baer is one of the largest private banks, and I can't think of a better defensive buy for our clients at this point of time. So you're getting a risk-free asset with a perpetuity of revenue. So I think, in my view, it's a good move by the government. They've brought the size down to 21,000 crores. So I think it will not even disrupt the IPO market. We'll have a price discovery process. And given the uncertainty in the global markets, you're leaving something on the table for the investors. If you see the market, right, in the last 20 years, the private players continue to gain market share. And while LIC is still the dominant player, but in all the new products, the private sector has a considerable market share. Keeping that in mind, I would still not overprice LIC compared to the private players because it's just the size. I mean, and for an elephant to move, it takes time. So I think this has been the right approach because you can't really compare it to the private players, their size, their nimble-footedness, and the market strength of both vary. Like LIC is traditionally strong in UP, West Bengal, in the heartland of India. The newer players are more strong in the affluent areas. So keeping all these factors in mind, the kind of policies that LIC has market leadership on, I mean, it's more endowment-led. I would still take a conservative view on the price.
Another expert echoed similar views.
The point is that I think if you make investor learn, then I think in the following round, investor will come again. And that is a very important point. I think if you don't leave any money on the table for investor, then probably next time I think investor will not come into your IPO. LIC knows it fully well that they will have to come in IPO again. Okay, because of IPO or FPO, whatever you call it as. I think they will have to come again because of the dilution requirement after listing. So in the current situation, if they are letting the investor earn out of the pricing, I think it's a sensible thing to do. There is no reason to say no to it. I think there will be a higher valuation. Today they are selling at 1.1 times embedded value. I would think that I think they can possibly go up to 2 times embedded value if I think market conditions remain very favorable and long-only investors I think walk into it. So that is a possibility, good possibility.
The share price performance of India's current IPO record holder also offers a lesson on what happens when an issue is overpriced. Shares of Paytm, which listed in November last year, are down 73% from their IPO price. Experts feel that the conservative valuation for LIC at this stage is a sensible approach by the government, which has to consider global and local market conditions, long-term return expectations of retail investors, and the nature of LIC's business compared to its private competitors, among other things. They say such attractive pricing will help an IPO of this size sail through easily, even as the markets remain choppy.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं?
ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं?
वो तो सबसे आसान है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
LIC IPO may well attract a fresh wave of investors into the markets. Something similar had happened with OTT platforms during the lockdown, when people of all ages turned to them. In 2020, Netflix had added 36 million subscribers, but the streaming giant saw its customer base shrink by 200,000 during January-March quarter, and it has projected a loss of another 2 million subscribers in the current quarter. Netflix is now mulling a low-cost subscription supported by advertising. Let us understand what it would mean for it and for the Indian OTT ecosystem.
Years ago, people across the world found themselves locked inside their homes amid the COVID-19 pandemic and desperately seeking diversions. Not surprisingly, Netflix saw its fortunes skyrocket. The OTT giant reportedly saw an addition of 36 million subscribers in 2020. This was the highest annual growth the company had seen since its video streaming debut in 2007. But that was then. Multiple factors, ranging from increasing inflation to even the Russian invasion of Ukraine, have been playing spoilers for it now. These have pushed Netflix to consider rolling out affordable subscription plans that would be supported by advertising. While revealing the plan, Netflix co-CEO Reed Hastings said that the company would look into the details involved over the next 1 year or two. How big a change this is for the company after years of offering commercial-free content was reflected in Hastings' observation on the topic. He hadn't been in favor of advertising in the past, but catering to consumers who were willing to tolerate advertising in return for lower prices made a lot of sense, Hastings said. Basically, this is Netflix's AVOD play. The acronym AVOD stands for a business model associated with online video on demand, like SVOD and TVOD. SVOD is subscription-based video on demand. AVOD is advertisement-based video on demand. And TVOD is transactional video on demand. On the face of it, this might seem counterintuitive, at least where India is concerned. According to a recent report by CII and Boston Consulting Group, over the past few years, India has seen a remarkable surge in SVOD content. Furthermore, the Indian OTT industry has been transitioning from the AVOD to the SVOD model. So, why such a move? It appears there's still a lot of money to be made with the AVOD model. Last November, analysts at Media Partners Asia's APOS India conference reportedly said that among OTT services, AVOD would continue to garner more revenue than SVOD. In fact, India's AVOD market size is estimated to grow from $1.1 billion in 2021 to $2.4 billion in 2026, according to a Deloitte 2022 prediction report. Now, what would such a move mean for Netflix? Would Netflix have to change its content strategy to grow its ad business in India? At the moment, Netflix is identified by its premium content. Would that focus shift to more mass-oriented local content? After all, mass reach is essential if it wants to capture the advertiser's interest.
In terms of the AVOD landscape, what it does is that, firstly, the landscape is heavily fragmented because India has got close to 60 plus OTT platforms today. A larger portion of these platforms are, AVOD based. Secondly, 60% of your AVOD revenue today is dominated by OTT platforms, which have got a very huge dependence on maybe aggregation of content or maybe sports content. So I think, a lot of change is required in terms of content strategy if one were to go in this market. Last but not the least, this market is very massy in nature. So Netflix as a platform is more for the niche audience. But if you look at most of the AVOD platforms in terms of the DNA, in terms of where they operate, they are very massy in nature in terms of the content they offer. So, some of the metrics, if you see like, YouTube, MX Player, Hotstar, the kind of metrics they have in terms of MAU, are probably 2x or 3x as compared to what the broadcaster-led OTT platforms are today. So I think this is how the entire AVOD market in India is. So it is not going to be easy for Netflix. It's going to be a very tough ride for them because there are other players, specifically aggregators and sports-led OTT platforms, which have a huge edge, because of the heavy consumption numbers on their platforms.
And does this move by Netflix indicate that the future of the Indian OTT market is freemium?
So India OTT market, if you look at the future actually is mixed as of now. So, we are definitely seeing a huge amount of growth in terms of SVOD revenue. And this is primarily to do with the nature of content that is being offered. So, a platform really cannot rely purely on AVOD, because that somehow does not, guarantee you that cash flow. And if you really want to make that large scale content, which is expensive in nature, you need to have an SVOD base. So I think once we started off in this market about 7 years back, most of the platforms were only offering AVOD services. But when they started to realize that they have to really offer that premium content because of the OTT audience being so demanding, most of them, are seeing that transition towards SVOD. And which is why you see, probably the SVOD revenue is growing slightly faster as compared to the AVOD revenue. But if you look at the split today, it is about 65-35 in favor of AVOD. This number about 5 years back was about 85-90 in favor of AVOD. So the share of SVOD is kind of increasing because of people's willingness to, to pay for the premium content. And I think going ahead, SVOD will grow at a faster pace. But nonetheless, I think freemium is what is going to be preferred for the next 5 years at least, wherein you will not see AVOD numbers probably coming down less than 50% in terms of share.
At present, Netflix has no presence in the sports domain anywhere in the world. Considering that IPL has had a large hand in Disney Plus Hotstar's success in India, can Netflix afford to ignore this area, especially given the love for cricket that Indians have?
यार मत पूछ यार, फिर से स्टॉक्स में फंस गया। तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर। इसमें बहुत तामझाम है। तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है। Investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
After Netflix, let us move on to the markets. It has been a roller coaster ride for investors during the April F&O series, with bears having the slight edge. Will they triumph, or will the bulls fight back today? Here's what to expect from the Nifty on expiry day.
Equity markets have been volatile of late, given the turmoil in global markets. The ongoing Ukraine crisis, high commodity prices, and a likely onset of higher interest rate regime have kept bulls on the sidelines. Back home, disappointment on the earnings front have also plagued select stocks, thus adding to the woes. So far in April, the NSE Nifty has swung in a wide range of nearly 1,300 points. From a high of 18,115, the index dropped to a low of 16,825 before recouping some of its lost ground. Still, the index is down over 3% on a month-to-date basis. Among the Nifty 50 stocks, Mahindra & Mahindra, Adani Ports, NTPC, Eicher Motors and Shree Cement have been the major gainers so far, while Hindalco, Tech Mahindra, Infosys, Wipro and Bajaj Finserv are the major losers.
April was one of the most volatile series what we have seen in the recent times, where due to the global concerns we have seen quite a bit of volatility that was happening. On the upper end levels, we had seen selling pressures on both the Nifty and the Bank Nifty index in the April series. We are still having a lower top, lower bottom formations which are intact. 16,800 on the Nifty was the level from where we had witnessed a sharp bounce, which will now act as a support. And for the Bank Nifty index, 35,500 to 35,700 zone has been the buying zone. Now, if I talk about tomorrow's expiry, these are the crucial level which needs to be held. On the upside, 17,400 for Nifty and 37,000 for the Bank Nifty remains to be a resistance level.
Now, the stage is set for a tug of war between the bulls and the bears on the expiry day. As per the options data, the highest open interest is seen in 17,500 call and 17,000 put. Higher open interest in call indicates resistance and vice versa in case of the puts. On Wednesday, the 17,000 and 17,100 calls saw significant build-up in open interest, and at the same time, the 17,000 put saw heavy addition. This trend suggests investors should brace themselves for a fierce tug-of-war in the range of 16,950 to 17,150. A significant breakout on the lower side of the range can trigger a sharp sell-off. On the other hand, a sustained trade above 17,150 can trigger a short covering rally. According to Manoj Vayalar of Religare Broking, with FIIs focused more on index options, volatility could be high today. A close above 17,250 on the Nifty and above 36,500 on the Bank Nifty can lead to over 400 points and 1,200 points rally on both the indices during the first week of May. Meanwhile, apart from the F&O expiry-induced volatility, markets may eye global cues for further trajectory. Moreover, stock-specific action amid Q4 results season will remain high. Shares of Ambuja Cement, Axis Bank, Bajaj Finserv, Biocon and Vedanta are likely to be in focus as the companies are scheduled to announce their Q4 earnings. The primary market too will see some action with the ongoing IPOs of Campus Activewear and Rainbow Children's Medicare. Further, the mega 21,000 crore rupees LIC IPO shall open for subscription on May 4 next week.
तुम इतना डर गए? अब क्या किया?
शेयर्स में ट्रेडिंग।
तुम्हें 5 पैसा नहीं पता?
ओए, अब तो सबको पता है। 5 पैसा पर मिलते हैं रिसर्च टूल्स, पोर्टफोलियो एनालिटिक्स और इन्वेस्टमेंट आइडियाज भी। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and reporting with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Russia-Ukraine war is not just shaping the markets, it is forging ties between countries too. India and European Union agreed to establish a Trade and Technology Council early this week. What is it and what will both sides gain from it? Watch our next report to know more.
Earlier this week, India and the European Union decided to launch a joint Trade and Technology Council to deepen ties between the two regions. And it comes at a time when the EU and India are not on the same page over the Russian attack on Ukraine. The deal was signed during the visit of the President of the European Commission, Ursula von der Leyen, on April 25th. The importance of the agreement can be gauged from the fact that the United States is the only other country that has a technical agreement with the EU, similar to the one signed with India. And for India, the decision to set up such a council will be the first with any of its partners. This strategic coordination mechanism will allow the two partners to address challenges in trade, trusted technology and security, deepening cooperation in these fields. This trade mechanism will allow both sides to work on fields such as 5G, artificial intelligence, climate modeling, and health-related technology. The 27-member EU is India's third largest trading partner, accounting for 62.8 billion euro worth of trade in goods in 2020, or 11.1% of total Indian trade, after China at 12% and the US at 11.7%. The EU is the second largest destination for Indian exports, after the US accounting for 14% of the total. Between 2007 and 2013, both the sides held 16 rounds of formal talks for a free trade agreement, but a deal could not be agreed upon due to stark differences over several issues. Both the sides have now agreed that rapid changes in the geopolitical environment highlight the need for joint in-depth strategic engagement. The Trade and Technology Council will provide the political steer and the necessary structure to operationalize political decisions, coordinate technical work, and report to the political level to ensure implementation and follow-up in areas that are important for the sustainable progress of European and Indian economies. The Council will comprise working groups led or co-led by relevant departments, services, or agencies to operationalize the political decisions into deliverables. For instance, the US and the EU have established 10 such working groups which are chaired by relevant US agencies and European Commission services. These working groups focus on tech standards, climate and green tech, secure supply chains, export controls, and investment screening, among others.
इसको 30 डिग्रीज कर देते हैं। अरे नहीं यार, 45 डिग्री सही है।
We Indians disagree on everything, but we agree. SBI is the banker to every Indian.
SBI का वीडियो KYC सेविंग्स अकाउंट। Finally I agree.
SBI is the banker to every Indian.
India and EU are also marking 60th anniversary of the establishment of diplomatic relations this year. That's all for today. For more news and analysis, log on to businessstandard.com. We'll be back tomorrow with our next episode. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.